So the $1.2 trillion infrastructure bill was just passed last week. This is going to cover everything from bridges to roads to airports to broadband to renewable energy. How does this all impact real estate? Real estate's big. We have industrial, we have office, we have retail, we have single family homes, we have rental units. There's a lot to cover. What will this mean to the industry overall? Hi, I'm Juan, president of Sage Real Estate, one of the highest rated real estate brokers in all of the US and also a real estate investor here in our backyard of Long Beach. Now, as soon as the bill was passed last week, my team and I have been researching on exactly what this means to real estate, and today we're gonna share our findings with you. Now let's dive right into this. As soon as this passed, this is a monumental bill. This is the largest investment in infrastructure since 1956. That was back when Eisenhower built the freeway system. So this is a major plus for the US. Lots of prior presidents were trying to put together such a package but have failed. And so we're super excited. And more importantly, this is going to create millions and millions of jobs within the next 5 years. Now, the word infrastructure doesn't carry a whole lot of weight for the most of us, because what do we imagine? We imagine roads and freeways and maybe improvements in our railroads. This bill is once in a generation investment that's going to create millions of jobs. Earlier this year, the American Society of Civil Engineers gave our infrastructure a C-. So this is a much needed investment. So what's this mean for people that are involved in real estate? We're talking about real estate brokers, real estate investors, real estate agents, folks that may own their house or plan to own a house, people who own commercial buildings, office buildings, medical office buildings, industrials. What does this mean for everyone? Now, how this $1.2 trillion infrastructure bill gets passed along, I'm gonna touch on a few that I believe are gonna impact real estate directly. Starting with roads and bridges, they've allocated $110 billion for roads and bridges. We all use this. It's a benefit for goods and services to have that. They've allocated $66 billion for railroads, $65 billion in broadband, $39 billion for public transit, $17 billion for the ports. Here in Long Beach, in LA County, we have one of the largest ports in the world right in our backyard. And right now we have this massive backlog of ships and containers trying to bring goods and services to here to our backyard, but we don't have the infrastructure right now to do so. This bill is going to alleviate that quite quickly. In fact, that's one of the important things they're going to get to starting in January. And $25 billion for airports, just to name a few. But I think when I look at this as a whole, the biggest proponent, the biggest benefit is the millions of jobs that it's going to create for our economy. And what does that equate to, right? This is going to be large construction companies, telecommunication companies that are going to be generating these big contracts. Now, the money doesn't just stay up there with these massive companies. When these jobs get assigned, the money doesn't just stay at the very top. It's a trickle-down effect. We're talking about vendors, employees, contractors, supervisors, staff. Even in raw material, all of a sudden you have this demand, this surge of money coming into our system that, quite frankly, anyone in the US is going to be touched and benefited from this infrastructure bill. What does this all mean for folks interested in real estate and what we can expect? Well, there are 5 metrics that any real estate investor would look at when they're going to determine whether to go invest in a certain area. They're going to look at job growth, population growth, income growth, real estate growth and values, and crime, and what they want to see, obviously, a reduction in crime. So if I'm a real estate investor and I'm looking at Detroit, and Detroit has a declining population, I probably may not want to go there, right? Because I need population to occupy the real estate that I'm going to buy. So just to give you an example, when I look at the infrastructure bill and when I see what that's going to do, right? Right off the bat, it's going to give us job growth. Job growth equates to income growth. Income growth means real estate values go up. It's a direct result. That means rental rates will have to go up. Values of real estate will go up. When folks have a secure job based directly from one of these construction jobs that comes from the infrastructure bill, they're going to save money. They're going to want to invest. They're going to want to buy that first house. What I like about the bill is that it's going to bring, they talk about broadband and improving roadways to rural areas. When I think of broadband, if broadband is going to improve, they need more what? Data centers. Data centers need to be warehoused within buildings. So even from an industrial perspective, we know the industrial sector has been booming in Southern California. There's simply not enough. Well, there's going to be a demand for more. And so developers will want to make sure that they fill that gap that's going to be necessary. With the infrastructure coming to rural areas, it's going to be a big boom for these types of areas. And so we need to keep close watch, right? Because this is going to be a development for the next 5 years, okay? They're going to start it immediately, but we need to be paying attention to what rural areas this is coming to, because the government is essentially taking the big risk of improving access to these rural areas. Once they do that, the developers will follow. All they need is for someone to pave the way. The developers will want to go there, build more housing, improve the housing stock, and invest in those areas. And so what we're going to see is probably more housing in rural areas, because now there's motivation to go there, right? The quality of life is going to be better, and developers will want to be there. So I would believe there's going to be increase in development and increase in housing. When there's more housing, then folks will want to open up retail centers, restaurants, and it's this domino effect. When the restaurants are there, then more people come. And we go back to my 5 metrics: population growth, income growth, real estate values go up, job growth goes up, and more importantly, we hope that crime goes down. And these are really, really good metrics. With population growth, you're gonna have an uptick in filling those vacant units. So vacancy should drop across the board from a residential perspective, but also let's talk about these retail centers that got hit hard during COVID. When we have an improvement of more goods and services passing through our nation, more and more folks are going to have the confidence to want to start their own business and go and sign that lease on those vacant retail centers. And so overall, the domino effect of what this infrastructure means to us is critically important. Now, going back to the $17 billion for port improvement, well, like I said before, we have one of the largest ports in the world here in our backyard. It's shared between LA and Long Beach. So right now we have a tremendous backlog. That means that there's a lot of goods that we're waiting to bring through our nation. And so we know that that is a priority for our local governments to be able to clear that backlog and get those goods through here, which means what? Consumers get the products that they need, stores get their shelves filled, people feel confident of what's going on, people have jobs, they're secure, they spend more money. The more money that we have in our economy, the more that the economy gets stimulated. And when people feel like they have more money, they invest more. They're gonna go invest in more real estate. They're gonna go out of state and buy a new building. And when people do this, there's more trading, there's more buyers and sellers. Overall, it's a win for everybody. Now, one of the concerns that I see or that I expect is right now we all know that if you're looking for a contractor, if you're a developer, or even just doing a small home remodel, it's really, really difficult to find a contractor. Contractors are in high demand. Material cost is up, and guess what? Their cost is up because their demand is so high. Now, what's gonna happen once their demand goes even higher, right? Because they're gonna be now wanting to help build all this new infrastructure that there's lots of capital for. What does that mean for us? Now, it might be a little difficult. It might get a little worse. I don't expect the cost of material to go down because there's going to be more demand for that. And so that's something that we'll need to watch closely, but I do see that being a little bit of an issue. So there you have it. That's just a kind of a short overview of the infrastructure bill. I am an investor, and what does this mean to me? It means that I should keep investing in real estate. It means that people will still want to live somewhere. It means that people are going to have better jobs, better paying jobs, and that if I take that risk of purchasing real estate today because it's going to be in demand tomorrow, then it's going to pay off because people are going to have better growth, more income. It's going to raise the value of real estate, which we already know that appreciation is super important. And overall, this is a huge benefit to the economy. We're just coming out of COVID. Some industries have done well, some haven't, but I believe that this infrastructure bill is gonna help fill that void now and through the next 5 years. So there you have it. That's what I have to say about this bill today. If you have any questions, please make sure to comment, like, subscribe, and share. And if there's any topic that you would like for me to cover, please let me know. That's all for now. Until next time.